All right. Changes made, tweaks made. I'm going to attempt to make a video that works. My name is Daniel Young. I'm the owner and founder of Adapted Perspective and the Adapted Perspective social media platforms. And I'm back with another meme update, to be honest. It's an unedited video. I'm filming this at work, so who knows what you'll hear in the background. I am not a financial advisor. I am a financial strategist. And I don't speak like the herd. I walk in limited company. Sometimes I walk alone. If you've seen any of my previous videos, you know that I love strategy and targeted strategy. That awareness is key because I'm going to keep sifting these financial memes using our investment strategies along with some everyday down-to-earth common sense. Know that I'm not out to slander anybody. I mean, most people have put a good deal of work in creating these financial memes. I'm just interested in separating the good from the bad when it comes to advice because none of us want bad advice as we navigate our finances. So let me share my screen. Let me share my screen. There we go. So this is the Pinterest board we're on. We're looking at this specific meme. I move this header out of the way. So we're going to look at the breakout or maybe the breakdown of these specific six based upon closed-end funds, but also take a look at some additional data. So let's see, there we are. So if we look at the far left, we have these six based upon data yesterday. They all pay quarterly. If you bought one share, just one share of every fund, you'd spend $820. You would get, well, depending on when they pay quarterly, you would get that every quarter. And then your overall dividend for the year is just under $20, which for a payout ratio on an annual yield, that sucks. I mean, if you believe the Fed's inflation rate is currently 2.9, you're losing money every year. And if you realize the Fed is lying about the inflation rate and inflation generally sits at 4%, then you're really losing money every year. You're hoping for this 2% gain essentially per fund every year, and you're not making that much overall in dividends, and you're really just kind of scraping by. But if you look at these two closed-end funds, both of these closed-end funds you can find online. They release the entire portfolio, and it's pretty easy to skim through it and see what you get. So if we compare both of these closed-end funds to these six, this is what you get. So you get about, I like whole shares, so I'd rather show you the partial shares before I do the whole shares. So you get 99 whole shares and 61 whole shares. You're still spending roughly the same amount of money because it's a little bit less because you're getting a whole share compared to a full share or compared to a partial share. But you're getting a much better annual dividend for the same amount of money. Now, the majority of memes that I look at talk about encouraging, drop $5,000 into each of them. So at $30,000, 5, 10, 15, 20, 25, 30, right? If you invested $30,000 into everything, that's a much different scene. And you can do the math. You still get the payoff ratio. But that's a completely different ballgame. I mean, $80 is better than $20 off 99 shares, but off $800 basically. But if you made that $30,000, that's a significant chunk of change, and you get that dividend monthly. So these are what the closed-end funds have for these six dividend kings. But I looked at the list or the rest of the list of the dividend kings, and this is what else is inside that portfolio, plus just a lot of other companies. So this has 10 more Dividend Kings. This has 9 more Dividend Kings, plus a lot of other companies inside that portfolio. So you can buy individual shares, or we'll say individual companies, and take on risk associated with each individual company. You can spend a lot for that company and get not much for that company. Or my advice is to find what you enjoy, but find it in a closed-end fund, because you'll pay less, you'll get it at a discount, and you can get a phenomenal dividend, which spreads your risk around every single company invested. And then they handle all the management for you. Let me stop this. So the bigger question is not so much what you should invest in, as opposed to, say, individual funds versus closed-end funds. It's, should you consider investing in the stocks right now or wait? And I can't tell you what to do, but I'll tell you what we're doing and what we're thinking. With several different outlets predicting a recession on the Fed's poor handling of the economy, if we factor in the possibility of a recession hitting at the end of this year or the beginning of next year, in a recession, bond prices generally go up and stock prices generally go down. So if you're buying now in the current greed cycle based on CNN's Fear and Greed Index, then you're going to pay more for something than you would rather, just because of the current greed cycle. And with a recession looming, then you're paying more for it now, knowing that it's going to go down when we hit recession, versus we're still investing in bonds. And you can find the same through closed-end funds. And I talk about what we're buying in the best closed-end fund selections on the weekends. But my advice for us, and what I would encourage you to do, is know your strategy, know your targets, know the system, yes, but kind of look bigger picture. Well, not kind of look, but look bigger picture. So if we do have a recession, stock prices are going to slide, and you're going to pay more for something now because of the greed cycle. And if you wait until we hit recession and we slide into fear and extreme fear, you'll pick it up at a really good value. And then you ride the wave essentially, or climb the roller coaster back up till you hit the top of the crest. And then you figure out if you want to buy more, you wait for it to fall again, but you figure out if you want to sell it high, or if you want to hold it and ride the roller coaster back down and buy it low again, and play a long game instead of feeding into the current frenzy. Stocks look good right now. You're going to pay more for them than you would maybe a month ago. But I still think it's a better bond market than a stock market. So that's all I have for this week on memes. If you want more information on closed-end funds and specific information about how we go about filtering all that data and processing that data and the strategy involved, then check out my closed-end fund videos, which I post over the weekend. So I have another one due up either Saturday or Sunday, or you can check out the past videos on the closed-end fund. I want to say it's the CEF portfolio, but whatever other playlist I have for closed-end funds. So I wish y'all a great week. Regardless of the choices you have, I mean, all of us have tons of choices when it comes down to what we're buying. You're in charge of your boat, just like I'm in charge of mine. Right? I can advise you, and I'll be honest and transparent with what we're doing, but it's your decisions that impact your course. So be the captain your ship needs. Captain your ship. And whatever it is that you're shooting for, those things aren't going to happen on their own. So improve your ability to navigate, and then make those dreams happen. So I wish you a great week. I will see y'all later. Bye-bye.